Something important is happening in February 2026, and most Canadians will not fully understand it until the money either arrives or doesn't. On the surface, it looks like a routine pension month, but underneath the calendar dates, February is lining up in a way that could create unexpected deposits, delayed expectations, and serious confusion for CPP and OAS recipients. The difference between knowing what is scheduled and assuming what is guaranteed could mean the difference between peace of mind and financial shock. This update is not about hype. It is about timing, eligibility, and how February 2026 quietly becomes one of the most sensitive pension months of the year. Canada Pension Plan and old age security payments follow structured rules, but those rules interact with weekends, processing cycles, benefit combinations, and eligibility thresholds that most people never read. February 2026 brings three key dates into focus: the 10th, the 14th, and the 25th. Each date matters for different reasons, and none of them mean the same thing for every senior. That is where misunderstanding begins. The February 10th date is drawing attention because it aligns with payment corrections, adjustments, and special processing for beneficiaries who experienced issues in earlier cycles. This does not mean every senior will be paid on the 10th. It means that for some recipients, particularly those whose payments were delayed, recalculated, or adjusted due to income reassessments or system updates, deposits may appear on or around this date. These are not bonuses. These are not new benefits. These are corrections, reconciliations, or delayed releases of funds that were already owed. The danger is assuming that February 10th applies universally. It does not. But for those affected, it can feel sudden, unexpected, and confusing if they are not prepared. February 14th is triggering even more speculation. Valentine's Day has no official connection to pensions, yet this date is being closely watched because of overlapping processing windows. When payment systems close out mid-month cycles, particularly during shorter months like February, some combined or adjusted payments can land earlier than expected. This is especially relevant for seniors receiving multiple benefits, such as CPP combined with OAS, or OAS paired with GIS or allowance benefits. When these systems synchronize, deposits can appear to be extra cash, when in reality they are either advanced timing, split payments, or recalculated amounts that reflect updated eligibility or income data. The money is real, but the interpretation is often wrong. February 25th remains the most critical date. This is the standard scheduled OAS payment date for February 2026, and it anchors the entire month. For most seniors, this is when old age security will arrive. CPP payments, depending on individual setup and coordination with OAS, may arrive on the same date or separately based on how benefits are structured. The key issue is that February is a shorter month, and when payment calendars compress, expectations become dangerous. Seniors who assume early payments mean additional money may overspend. Seniors who expect early payments but do not qualify may panic unnecessarily. Both outcomes are avoidable with clarity. Extra cash is the phrase causing the most confusion. In February 2026, extra cash does not automatically mean new government giveaways. It can mean retroactive adjustments from prior months. It can mean GIS recalculations after income verification. It can mean CPP post-retirement benefit additions. It can also mean tax-related withholding changes that temporarily increase net deposits. None of these apply to everyone, and none of them are random. They are triggered by specific conditions that many seniors are unaware they meet. CPP payments can change due to continued contributions after retirement, especially for those who are still working or recently stopped. These post-retirement benefits are added automatically, but the timing can feel unpredictable. February is often when cumulative adjustments surface because annual contribution data has been finalized. That adjustment may look like extra money, but it is actually earned entitlement being released. OAS payments can shift due to age-based increases, residency confirmations, or deferral calculations. Seniors who delayed OAS beyond age 65 receive higher monthly payments, and when adjustments are processed, the result can be a noticeable increase. Again, not a bonus. A correction, a fulfillment of policy rules that reward delayed uptake. GIS-related changes are even more sensitive. Guaranteed income supplement amounts are tied directly to income. When income changes, GIS changes. February often reflects updated tax information from the previous year. If income dropped, GIS may rise. If income rose, GIS may fall. When the change goes in the beneficiary's favor, it feels like extra cash. When it goes against them, it feels like a loss. Both are outcomes of the same system. What makes February 2026 particularly tense is that all of these factors converge in a short time window. Seniors checking their bank accounts more frequently may see deposits that do not match expectations. Some may see money earlier, some may see less. Some may see nothing different at all. The system is not broken, it is complex. Another critical factor is direct deposit processing. Financial institutions process government deposits differently. A payment scheduled for the 25th may appear on the 24th or even late on the 23rd, depending on the bank. This does not mean the payment date changed. It means the bank posted it early. Seniors who see early deposits sometimes assume an additional payment is coming later. It is not. The money was simply visible earlier. February also heightens risk around misinformation. Social media posts, forwarded messages, and sensational headlines often suggest that everyone is getting extra money or that a triple payment is coming. This is rarely accurate. Payments are individualized. Eligibility matters, income matters, age matters, contribution history matters. Assuming universality is the fastest way to misunderstand your own finances. Seniors should focus on their official payment statements, My Service Canada account updates, and direct communication from Service Canada. These are the only reliable sources. Bank deposits alone do not tell the full story. The description attached to the deposit, the amount compared to previous months, and any accompanying notices matter more than the date alone. February 2026 is not a crisis month, but it is a month where misunderstanding can cause stress, poor budgeting decisions, and unnecessary fear. Knowing that the 10th, 14th, and 25th each serve different functions within the pension system allows seniors to stay calm and informed. The idea of extra cash should be treated carefully. If more money appears, it is wise to confirm why before assuming it will continue. Temporary increases are common. Permanent increases are earned but clearly documented. Spending based on assumptions rather than confirmation can create problems in March and beyond. CPP and OAS are designed to be predictable over time, not exciting month to month. When a month feels unusual, it is usually because of processing mechanics, not policy surprises. February's shorter length compresses timelines and magnifies visibility, but the underlying rules remain stable. The smartest move for seniors in February 2026 is awareness, not anticipation. Watch your account, but also read your notices. Compare amounts, not rumors. Understand that timing does not equal entitlement, and entitlement does not always arrive dramatically. This update is not meant to create fear. It is meant to prevent confusion. February will pass quickly, but decisions made during it can last much longer. Understanding why money arrives is just as important as receiving it. Stay informed, stay cautious, stay empowered. Subscribe for reliable pension updates. Share this information with someone who depends on CPP or OAS.